Hello, mic test. Hello, guys, and welcome to our 101st Trading Opportunities webinar session. And right now, I'm just checking the microphone. So if you guys are in the live chat, let me know if you can hear me and see the shared screen. Mm, looks like we are live on LinkedIn, and I'm just trying to check on YouTube right now. And it is working. Yeah, it is. So with that, let's now begin. So first of all, guys, let's go over the disclaimer here on screen. Basically, all content presented here is for educational purposes. I'm not soliciting buy or sell. If you go on to use the views presented here for your trading or investing or for any other purpose, you yourself will be liable for your profit, your loss of profit, or any other situation that might arise as a result of you using the views presented here. Right. So that's that covering the disclaimer. Now let's head over and let me give you a very quick introduction, guys. As you already know, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis website and YouTube channel. And this is our 101st edition of the Trading Opportunities webinar. This is a weekly series of webinars that we have been conducting every week on Friday. And the timing has always been 7:30 p.m. IST or 2 p.m. GMT. So whichever time zone you are in, just convert it to your respective time. And these are done in live market situations. As you can see, this is the time live market is open here, except for Nifty. Nifty is closed at this point in time, at least in the regular market session. Right. With that being said, in the last 100 webinars, we have captured a total of 219 trades. Right. We will go over what worked from the last webinar, what didn't work, and etc. in today's session, obviously. And apart from this, I'm also the author of the book Think with the Markets, available on Amazon's Kindle electronic book reading platform. You can just buy it electronically if you want to have a read. And more of my work, let me just quickly run you down, is available on my website 50s.com. You can visit it. And if you are not very proficient with Elliott Wave, then worth noting that I have a video course with 1500 students in it, and it's available via this link. You can just go to Elliott Wave course and check the details, etc. It's a video course, and it's available at a 10% discount, I think, currently running. So, anyways, book course, and apart from that, we conduct webinars, and there are also private classes. If you are interested, you can request details for training program LT. We will be starting the next batch in March first week. Right, more details will be shared to the people who are in the emailing list, of course, first and foremost. And if you are not, you can subscribe to the mailing list as well by visiting this link in the top and just putting in your name, email, obviously. Lastly, our Slack group, I'm planning to close it down probably by the end of this month. But for now, if you are what do you call clear on the basics and want to be a part of our Slack group, then you can send a request for the same by selecting the subject matter as requesting details for Slack private group. Right. That being said, let's now head over to the webinar. And yeah, last thing, we go in every webinar in this sequence. First, we discussed Euro USD, followed by crude oil, gold, S&P is 500, Nifty is 50, and Bitcoin. Right. That will be the sequence for today's webinar as well. And if you are live in the webinar and have a question, you can put it in the live chat as well. Right. With that being said, let's now head over to our first chart, which will be the chart of Euro USD. Check S&P. It had given me an alert. looks like the fifth is complete, and I probably should move my stops higher. So I'll do it when we reach S&P. So this is our first chart of Euro USD, right? And in every webinar, what we do is we go and take a look at what happened in the last one, and then we continue from there. So before we do that, I have yes, Sushil is live in the chat. Hello, Sushil. Nice to see you here. And if you guys are in the chat live, you can definitely say a hi. I mean, that's the whole point of doing these webinars live. Anyways, so what's that? 1 second. Shares and cameras. Yeah, that should save some bandwidth. Yeah. So as I was saying, let's head over and see what was being said in the last webinar on the chart of Euro. And let's check. This is the 100th webinar. Let me open the link. In case you want to check any of the things which we are saying or check the discussion in complete detail, just head on to the YouTube channel 50 as market analysis, right? And click on the live section and then select the number of the webinar you want. All these webinars are time stamped, by the way, so you won't have much of an issue navigating through them. Let me turn off the audio for this one. By the way, make sure to turn the quality to 1080p always. So here's the chart of Euro USD, and let's see what was being said in the last webinar. So somewhere here we were discussing Euro USD in the last webinar, and from what I recall, we were still looking to trade this diagonal structure. We had increased our stop loss near this red line, a little bit above this red line, and if the market goes below it, then it will invalidate the whole count. That was the whole theme which we were talking about in the last webinar, right? 1 second. Yeah, so as I was saying, this was the theme that we were looking for a possible ending diagonal with the red line as our stop loss level, and this was the third attempt of trying to take a long trade here. This market has been giving us possible long setups 3 times now, and obviously this third one also failed. The stop loss was hit. Later on, I reversed my position to short. It was a scalp short. I remember on 5th February I took it. So now let's look at the actual chart and see how it really progressed. So this is somewhere here. We were discussing it 2nd February, somewhere here. I think, yeah, somewhere here in this region. Right. So the stop loss was hit. It gave us a small sell setup as well. I took some shorts here. I think here somewhere, right? They were, of course, posted in the Slack group, added shorts as per orange count, booked profits on shorts. Not a very big move, but that's how you move in and out when you have big volumes playing out. It was posted live in the Slack. Anyways, now what's the situation right now? Let's see. So first of all, the whole idea was based on this, that from this point of reference, which is a price level of 1.05183, we have a wave 1 up followed by a ABC down, right? Hi Hemang, nice to see you here in the live chat again. So as I was saying, the idea was that we are in a wave 1 up from here, and then from there we have a flat correction maybe, and that's why we were counting this as a possible diagonal, because wave C can be either an impulse or it can be a diagonal, right? Now that that setup has failed, what's the count now? The count now is let me just show you. I have already counted it. So the count now is that this market is likely progressing sideways. Sideways as in the B as a possible triangle, could be a complex as well. But if we remove everything, the idea is that this market may be doing something like this. So this may be the A, and this may be the dot B, dot C, and dot D. So long story short, we are expecting that this market may give one leg down after this triangle is complete, which will in turns complete the, let's call this the circle A, this called as the circle B and circle C. So this will become a sort of a zigzag kind of structure, and not necessarily a zigzag, let's say a kind of a sideways kind of structure, because the exact nature will only be known when we have the end for wave E here, right? So a sideways structure with the first leg down as A, correction as triangle for B, and then possible diagonal or impulse down for C, right? So that's the expected progression on this counter, right? So long story short, what I'll be looking for now is a long trade above this trend line. What I can do is, let me see. See if I can change the color here. Yes, so this yellow trend line, once the market goes above it, this will give us a short-term long setup for this wave C, right? Cannot determine the targets because right now we are assuming that the B is over here, that is complete over here, but we actually don't know if the B is complete already. So if the B is still continuing, then the projections for C will change, of course, right? So that's why I'm not interested in the targets for wave C, but the setup is crystal clear above this trend line, above this yellow trend line. If the market sustains above it, that is goes above it and then takes support above it, right? Then I'll be interested in longs on this counter, right? So that's simple enough. The counts have also changed. Now we are counting this as a diagonal for, let's say, dot dot A and dot dot B, and this is what you call a dot dot C, a zigzag basically, right? So that's our current setup on Euro USD longs above this yellow trend line. Shorts may be doing something more on the downside. We don't have a confirmation for that, so I won't be taking it right now. Although I would like to place an alert here. If it does go down, we can get in some quick scalps near the lows. That's definitely possible. Next idea which I have on this counter is actually many things are possible here. It is also possible that after this wave one, this can become a running flat kind of structure, and in which case we won't see that leg down which I was talking about in the last hypothesis. So let's call this the hypo 2. So in this hypo 2, the market can just take off from here, right? And then give this minor pullback before taking new highs. So that's also possible. So in both cases, you can see the theme is that this leg is common. Even in the scenario where we had a triangle, we had a leg going like this. In the second scenario, H2, we have a leg going like this, that is higher than the last high, right? And in the last one, let me change the color. It was going somewhere in the range, somewhere here, let's say, roughly speaking. And in the next one, it takes out the range or expands the range, let's say. So long story short, our bias remains bullish on the swing perspective, and we look for long trades, right? Overall, short-term wise as well as long-term wise. Unless, of course, the market breaks the low, and in that case, we can take some scalps. But that totally depends on your own analysis. Can't talk about it right now. With that being said, let's head over to our next chart. Hello, Sandeep Mitra, how are you? Nice to see you back again. I remember you used to attend the webinars live long time back. So next up chart will be crude oil. And as always, let's do a quick check on what was being said in the last webinar on crude oil. Here is the chart for CL, and we were discussing it last time around somewhere here. We had the analysis pointed out on this chart. So let's see. So here's the recording from our last 100th trading opportunities webinar, and we are just checking what we said in the last webinar on this chart. So this one actually played out picture perfect, like literally point to point. Let's see what was being said. So this is full screen view of the recording. So what I was thinking was that this market has some sideways movement remaining and then a down leg for the fifth wave. Once that is complete, we will see a up move, possibly strong for wave Y. May or may not be strong, but up for wave Y. Basically, the plan was that this up move will take out this high of 79 point whatever. right? That was the count. So what happened actually was the market did go sideways and then down and then up. It hasn't taken out the high yet, and the plan was we'll look for longs above 76.2. So we'll check all of that. And yeah, guys, keep in mind what I am showing here is just a glimpse of what was all said, right? In reality, a lot more details were discussed. For instance, the actual plan was that the market should go higher without touching 70.624. So if the market touches and goes below 70.624, then the setup is invalid. So in reality, the market did take support around 71 point something something and then reversed. So there was a lot more detail in it. So you can just head over to the last recording yourselves 100th webinar. For that, you will have to just go to the channel 50 hours market analysis, click on live, select 100, and here you can see it's all timestamp. So this is all crude oil analysis started around 15 and 24, so almost 9 minutes of discussion, right? So with that being said, let's now check the actual chart on CL. So here's the chart. Okay, it should have entered longs already. Here's that. So this is the last discussion, 2nd February. Somewhere here we discussed the markets. Okay. And from our last discussion, as I said, the idea was it will go sideways and then down. So it did go sideways for wave 4 correction, then made a down leg exactly as per analysis, and then made an up leg. So literally all has worked out. And let me do one thing here. Let me just quickly add some here. 1 second. The stop loss will be wide somewhere around 72, 73. Yeah, 73 something. Done. So the idea is, now that I'm long on CL, the idea is basically that this market is either completed the wave BR2 here and is heading straight up, or it's continuing for wave BR2 and then will head up. So swing perspective, it's a long, and if it gives a correction for this leg down for B as a triangle, then again I'll add more longs here. So that's why I've moved the alert up on the counter. It's kind of self-explanatory here. Let's call this the A, B, and then you can take a guess. It's the C. Simple Elliott Wave pattern, zigzag basically. And if it's an impulse, then this will become A will become a 1, B will become a 2, and then C will be called a 3. Variation is very simple. B may be expanding sideways or going sideways, let's just say. So it can do that within this box range, in which case it can go a little bit up, down, and then fly high, right? So that's why I have added partial longs only. Stop loss around 73. So that's that for crude oil. I don't think there is much to add here. It's finally giving us a rally. Let's see how far it takes. Yeah, one good point which I can think of here is that this congestion has been quite time consuming so far. So my expectation is that once it gives us a rally, the rally can be substantial. Of course, not every analysis plays out well, but I'm expecting, at least at this point in time, that we can see a substantial rally on this counter. Right? Let's see how it goes, or let's see how far we go with it. Right. With that being said, let's now head over to our next analysis, which will be the chart of gold, which, as I recall in the last webinar, the situation was a little bit unclear on the counter. Let's see what's going on now. Here's the chart. And in case you have not been following our past webinars, I just wanted to clarify that gold has been an instrument which has given us way too many clear and big win trade setups since the last, I don't know how many webinars. right? So basically a lot of webinars. We have been able to capture big amount of up trades here, long trades here, and here, and then short trades here as well, here, long trades, etc., etc., etc. But for now, it has been unclear since this point, right? And I'm out of this. Although the count is clear, but not clear enough to execute a trade. So let's just discuss what's going on here. Hello, Jay. Nice to see you live here. So now let's see what's going on here in gold, right? Of course, we'll just check the last webinar's recording. Although I recall there also we did not have a very clear view on it. So here's the recording from the 100th Trading Opportunities webinar. We were discussing gold around 24 and was a short discussion, lasted till 29, almost 5 minutes. So the discussion basically was that we are seeing a sideways correction for wave 2 and then one more down leg maybe possible here. That was the main theme. Right now the thing was that even though this analysis is suggesting short-term downward movement, the swing perspective is long. That is, on a long-term time frame, the count is extremely bullish. So that's a contradictory situation here. We don't want to enter without a clear confirmation, right? So that's why we were out of the market here. The setup was very clear below 2020, I believe. Let me just play this. We were looking for we will look for selling opportunities below 2020, and that alert I believe has not been triggered yet because I don't have any position on gold so far. Let me just speed this up and see if we discuss the levels anytime soon here. Otherwise, I don't think it's of much importance. So anyways, let's see the live chart now. You can check the whole thing yourselves. So what's my plan right now? My plan is to follow this orange count. This orange count, let me just remove everything and show you is the expectancy is. So this is my primary view, which is a bit bearish, as you can see over here, right? The view is that this is W and X, or you can just call it an ABC for the sake of simplicity. Let's say A, B may go a little bit lower. Keep in mind, these are just rough outlooks. I'm not projecting proper levels of any sort. That's just something I'm expecting might happen like this. C up and then D down and then, sorry, C up and then a new leg down. Right, so that's our main count here on gold so far. So my idea is that I'll look for shorts below 2011, right? Last time it did go almost to 2020. Yeah, I recall now. It almost touched my alert. I think it didn't fire it, so I adjusted it lower because I don't want to take a trade with less confirmation. We want a solid idea that yes, it is following this count only, then I'll be looking for selling it, right? Now, if this count is being followed, then where can this wave B go? This wave B can go till 90% of this thing. That's the general expectancy. So we can take a retracement. 90% is coming around 1984. That shall serve us as our target level or expected target level. And if it continues lower, then this white support region is already drawn at 1937 as the upper level for it, right? So that's the expectancy on this counter. Either it can go to 1984 and then reverse, and if not, then we may see a move till 1937 if this count is correct, right? So again, I'm not adding any shorts. I'll be interested in taking shorts below 2012. So that's just an alert to alert me. It's not a trading signal or anything. I'll just look at the chart again, and if I feel like I should wait a little bit more, I'll wait a little bit more before adding anything, or perhaps not add anything at all. So that's my take on gold. So far, it's following the plan. Let's see how it goes from there. Next one will be S&P's 500, where we were long, and it is actually working out precisely as we expected. But before heading over to the webinar, let's just quickly check what we discussed on S&P's 500 in the last webinar, so that we have those who are new here visual plan from last one, 34, somewhere here. We discussed S&P around 29 till 38, so almost an 11-minute discussion. Actually 9 minutes. So what we have over here in the discussion is, this is the recording from last webinar. The idea was pretty simple. Let me just quickly go back a little bit. That if this is a wave 1, I'm just drawing on top of the recording, and this is the 2, then either it's complete or continuing, doesn't really matter. We expect upside to fall on this counter, and this was the trigger above 4968. I will be looking for adding more longs because I was already long on this. I did add more longs on S&P, by the way. And let me see if there was anything else. I think that was the major gist of it, that above 4968 we look to add more. And then I'm just discussing some targets like 5061, 5143, and the minimum was of course 5000, which is a psychological level. So it has already gone and done that. Let's just check the actual webinar here. So we were discussing it on 2nd February, somewhere here. 4968 is here. As you can see, it has already triggered it, gone above it, took that level as a resistance because there was a reversal from there, and then it flew up again. This time it's taking resistance around 5013 something, right? So this one again worked out precisely as per analysis. What is there to add here? I'm actually gonna have to check it by squeezing the chart a little bit. We have a series of impulses here and a correction here, and then 1 2, and then this is what, a 3, a 4, and a 5th for a double dot 1, double dot 2. So it has at least 2 legs from this double dot series and one more leg at least. So 3 4 maybe more legs up are remaining. So the I'll just remove everything. This is the daily chart. So if our analysis is correct, then it's just heading up for new lifetime highs. Should be able to figure out so 1 2, and then 1 2 3 4 3 4 5, and what's the other count is A, and then A B C for B. So I'll just share with you the bearish outlook we have. The bearish outlook basically is suggesting that this is the A wave and this is the B wave, and then there will be a C wave. I don't have any evidence for it, and even if it really does play out, once the C is complete, we still will see a new leg up from there. So overall, the counter is bullish. That's the only real important bearish possibility that I have in mind. Right. So far, it does not look like anything regarding this is happening. So I'm not going to pay much attention to it or emphasis on it. For now, what I'm going to do is see the strategy for our current bullish count. Let's head over back to 15 minutes. The thing is that if this really is the start of a strong up move or a strong bull wave, then there is really not much point in figuring out targets, because it should, practically speaking, take out all those targets. Like wave 3 can be 3.618, 4.618, and even higher in a strong bull move. So that's why I'm saying there's not much point. We have already marked the next one, 5200. So immediately we are looking for 5110 and then 5210. So these are the immediate targets. Downside wise, what I should do is trail my stop loss, and I think it will be at least trail to 4940 something level. although I might change this depending upon the situation. Current count is suggesting that we are in a wave 4, so we can even adjust it further. So that's our expected progression on S&P's 500. Some sideways movement for wave 4 followed by one more leg up. That's the immediate progression. Problematic situation arises if we see market sustain below 49.90. From short term perspective, I can even move the stop loss to 49.85, maybe 84. Yes, does work for me. So I'll adjust the stop loss around somewhere here. Right. We'll look to possibly add more if the market again takes out the high. Right. And until our trailing stops are taken, I'll look to continue adding more. Right. So that's the whole plan on S&P. See, there's a comment here. Logical trader, Jonas is awesome. Can you please include Bank Nifty in these videos as well? Humble request. Well, logical trader, I'm not seeing much participation in whatever I'm already doing. It's stuck around 500 to 1,000 views. Once I start getting some consistency in those views, then I can definitely look to add more things. We actually had a plan to add a separate series for Nifty and Bank Nifty, taking it out of the weekly series, maybe covering it twice or more in a week. But then again, we need more participation. Don't want to continue doing it for a very small amount of views. It takes a lot of time putting out a webinar, around 1 hour to push the updates on social media, put up the image, text, etc., and then 1 hour to distribute it later on to different platforms to publish it. So yes, that's in a plan, but you guys need to share the content more. Once we see a consistency above 1,000 views, then we can definitely expand and cover not just Bank Nifty, but other major important markets as well. Right. So yeah, that brings me to the part where I request you guys to continue sharing my work. Right. So request here, guys. We can have a little bit help from you by the means of sharing it. If you can share it with 5 of your contacts, LinkedIn, Twitter, whatever, you can repost my tweet on Twitter. And I think LinkedIn also has a repost feature, I believe. And whatever other platforms you are using, we also share the content on Facebook. So there also, right? Once you do that, we can reach more people. And once we have a consistency in views, we can plan to take these analysis with more markets, right? So kindly do your part and share the content. With that being said, I think S&P we have discussed whatever we wanted to discuss here, and we should now move on to our last two charts, which will be Nifty, which will be followed by Bank Nifty. Nifty, let's head over there. That's the one. So before discussing what all happened right now, let's just quickly check what was being said on Nifty in the last webinar. And here's the recording for the last webinar, the 100th Trading Opportunities webinar. We have discussed Nifty around somewhere here, 41 something something. And the main theme was that this is, let me zoom in, 15-minute chart. As you can see, the main theme was that this market can remain sideways and within this white yellow box range, which is around 22,100 to 21,140. And once this box range is complete, then this market can shoot up, right? So that was the main theme. Second idea was that if it shoots up straight off, then we'll be interested in long only above the high 22,100, right? You can check the whole analysis starts around 38 and ends around 45 something, roughly 7 minutes. So that was the major idea. Now, what really happened was market did go and give a correction. Let's see that. And I have some updates to this analysis, like change of views. So this is a changed view, or let's say a secondary hypothesis, which we did not discuss in the live webinar. I do generally skip some points always just to save time, and also that I don't want to get into too complex discussions. Now, what has happened here is the primary bias remains active. The primary bias was this sideways range and 20 to 100 to downside around 21, 139 or whatever is still active. Market can still go sideways. Last time we discussed it around here, and the idea was only about the high 20 to 100 will be interested in longs. If not, this market can go down. Now, so what's the addition here? The addition is that we are considering the possibility that this whole down leg or correction we started at this point of reference, which is around 22 130, has already completed. This is the A, this is the B, and this is the C, right? And if that's the case, and this thing has already completed, then what is this happening here? So this is a possible LD, leading diagonal, and leading diagonal will have a correction. Now this is following all these guidelines like really nicely so far. What I'm seeing here is this market is already done the bare minimum. The bare minimum for leading diagonal is that the market gives a three-wave correction after its completion. This is the completion point for the leading diagonal, and here you can see the market has given a three-wave correction, so the minimum downside is complete. Now, so once the minimum is complete, we can say that this market is now possibly open for upside. However, things are not as simple because minimum is three waves. It can also go down for one more three waves set after X wave. So what I'm really saying is that if this is a ABC, either the market can just fly high. Let's just call that as a possibility one, right? And the possibility two will be that the market gives a set of one more down leg goes up for X and then another down leg for an ABC. This will be a double zigzag kind of move here. Actually, not double zigzag, maybe flat. Or just let's just call it complex. I don't want to get into technicalities or anything. So X wave connector and then another ABC down. So that's definitely possible. I don't have any reason to relegate that for now, right? So that will be what you call our H2 or secondary hypothesis, which is suggesting minor up leg and then bigger down move. And keep in mind, the first hypothesis was big up move. So overall, we have a sort of short-term confluence here of small upside, but that's hard to play unless you can do short-term Elliott wave analysis. It won't be possible for you to play that out, right? So that's our complete bias on Nifty. Let me see if there was any other point. Not really. Story remains the same around 22,000 only. We'll be interested in longs, right? And yeah, the simple thing which I have here is that if the market takes out the low around 21,680, I'll definitely be interested in selling it. And of course, I'll track the market live to see if it does give us an X. And keep in mind, X wave itself can take multiple different patterns. So yeah, it can become more complex and all. So can't really say much here. We'll have to update in Slack later on. And here's a comment from Sushil: Slack updates rocked and gave hands profits on Bank Nifty. Yeah, Sushil is right here. Sushil is in our Slack private group. And yeah, and we did cover strong downside movements on Bank Nifty actually. Well, this whole leg was there. And this was just an additional gift here because this was a minimum requirement. So again, I won't be discussing the whole theme here. It's a complex analysis playing out on Bank Nifty. But yes, as you guys know already, we cover all of this in our Slack private group with live updates. In case you are not aware, you can request details for it by visiting our 50hours.com/contact us page and selecting the subject matter for Slack private group. Right. So yeah, that was all for Nifty. I want to now switch to BTC, which has also given us exceptionally clear moves. And once again, guys, if you are enjoying the content here, make sure to hit the like button. And even more importantly, make sure to share the content with at least 5 of your contacts so that we can reach much more views on this webinars that we do. Right, here is the Bitcoin chart. And this one actually played out precisely as per our analysis from the last webinar. So let's now quickly check what was being said in the last webinar before discussing the current thing. And here's the recording from the last webinar, Bitcoin around here somewhere at the end. Yeah, there it is. So as you can see here, I'll just zoom into this. So this is the analysis from the last webinar. And what I was saying here was that A up is complete, B down possibly in continuation, and then one leg up is remaining. Of course, there are some other important points we discussed because this and discussion went from 47 something to 55 something. So there are other points which we discussed. You gotta check that yourself, right? Head over to the live webinar and check the whole thing. So the gist of it was we are looking for upside, as you can see with all the hypothesis, the CN hypothesis as well as the yellow one, both are suggesting upward movement. And that is what really happened here. The market did go sideways for B and then head up for the C. Minimum requirement on these things is the channel line. It has already given that, tried to go above it and was shot down, at least for now, looks to be the case. So this is following the whole thing picture perfectly. Now, what's the story from here? Now, the story from here is not that simple as our last analysis. Our last analysis was done here somewhere, 2nd February. Let's see. Yeah, somewhere here we discussed it. The idea was straight up move or some minor correction and then up move. In this case, it did give the minor correction sideways and then up move. Now this opens the market to multiple different possibilities. Let me just quickly check. Yes, it is looking like it's almost near 90. Now the few things that can happen here is this market is in a sideways correction, right? Now, if it is really in a sideways correction, then this market can just continue going within this range, even expand this range a little bit by actually a little bit too much by 53,000 something. Yeah, 53,000. Yeah. And the current high is around 49,000. So a little bit up move can be seen here. Keep in mind it's a volatile market. I'll just plot the expected scenarios here. That's one view. And the other view is, let's just call this one as hypo one. The other view which I have is, let's put it in yellow. Whole thing complete here. And this is a 1, 2, and then a series of impulses. 5, and then a correction again, and then up again. So both of these scenarios are suggesting that short-term wise upside movement can be seen. The tricky thing is that if the yellow count plays out, yes, that's all bullish, and we can just keep trailing the stops. The market will keep going higher, right? However, the other scenario, which is suggesting that this market can, let me just remove the yellow one. The other scenario, or H1, is a bit complex. This market in this case can just remain sideways here as well. That is to say, it can also fall from here within this range as well, and then go up after substantial correction. So that's why, as I said, it's not very easy to trade it right now. If you have a long position, yes, of course, you can trail it depending upon your entry and risk management. But if you don't have a long position, that's not the time I would suggest a long entry right now. Next up, what I will look for is some sort of sideways correction. If we see some sort of congestion, then I'll look for checking what kind of structure it is. It's a triangle for wave 4, then I can look for triangle break and long trades, and so on and so forth. So right now it's a wait and watch. Bias remains bullish, but only if you are long. Keep trailing. If you are not long, I do not suggest anything here at once. Yeah, and second idea would be to look out for short side, and the short side we do have this channel as a guide. So once we see the market sustain below the lower channel trend line, the market, if it does something like this, then we may look for shorts. But keep in mind, I do not think that as the main theme. That's just a idea to keep in the back of your head, but it's not the main theme here. Probably won't play out either. So wait and watch on BTC. And with that, I would say we have concluded our discussions for this week's webinar. I hope you liked the content. If you did, definitely make sure to hit the like button. And even more importantly, as I've said, 2 times before in this webinar. Make sure you share the content with your friends, colleagues, or anyone who will find this of benefit. Right. So with that being said, I'll just close out this webinar, and thank you for staying till the end and your contribution in letting us reach more audience. Take care, guys, and I'll see you in the next one.